They're going to build a 2-story warehouse, which is going to be a great development. It'll be a really interesting one to keep our eye on because that's a lot of product to be dumped down into this market, in a market that just traditionally does not see a lot of big tenants.
Good day, Industrial Advisors listeners, and thank you for tuning in. If you have not subscribed, please do so by clicking subscribe wherever you podcast. Click the like button and hit the bell if you want notifications of when we put up new content. Leave us a comment about anything we discuss here today or general comments about the show. Now, let's get into it.
Welcome to our Industrial Advisors podcast. You have Bill Condon and Matt McGregor. Today we're doing a 5-minute Friday. Specifically, we're talking about the South Seattle submarket here in the Puget Sound, which traditionally has been a really nice market and still is performing fine. But what we want to talk about today is how the market in general in the Puget Sound region is 3.5% vacant. South Seattle actually has the highest vacancy, which is closer to about 6%. So Matt, what are the reasons you think South Seattle isn't performing at the same level that maybe some of the other markets that are really hitting it pretty hard?
Sure, Bill, thanks. And for those of you who don't know, that South Seattle market is right bordered up against the Central Business District, just south of stadiums and north of Boeing Field, consisting of about 40 million feet of product. And typically, like most closed-end markets, they're your lowest vacancy, right? Highest demand. And throughout our career, it kind of hovers between, say, 1% and 2.5%. And as always, you just take it for granted that it's the lowest vacancy. And not much product available there, construction related. But you're right. It's the highest vacancy. It's been climbing for several years. And I think it's a combination of reasons. I think it's aged product, right? Yep. I don't know what the average age is, but it's north of 70 years on some of that stuff. Secondly, it's very expensive, right? It's always been 30, 40 cents higher than the North Valley, which is very close to it in proximity. So you take the old with the expensive, and now no secret, Seattle's got some political issues. Seattle's got a lot of homeless that's down there, a lot of encampments that are in front of businesses, and I think people are tired, and I think they're not going to pay up for those type of issues, and they're saying, I've had enough. I'm going to move down to the valley. So I think those are the combinations of the issues.
Yeah, I think in addition to those, which are all very valid, lack of labor in that particular market.
Expensive labor.
Yeah, exactly. So I think that certainly has something to do with it. Probably the biggest thing that companies are dealing with right now is labor, and that's not a great labor market when you look at the region. We have seen over the years tenants move further and further south, right? As you get better product and you're not paying as much money for that product. So the other thing I will add is the tenant velocity in some of those other particular markets is much stronger than it is in South Seattle. So it's a deeper tenant market as you push south.
Yeah, because the people that want to be there, I mean, it's a flight to quality. Like you look at what Prologis did there with the triple decker, phenomenal quality product, filled quickly, no issues. I think the stuff that they're building on the distribution side over at Emerald, the old Sabi location, is again quality. So flight to quality. I think the big issue is with a lot of the aged assets or the assets that are maybe being designed that have some challenges to it, and the unfortunate ones that might have some homeless encampments in front of it when tenants are touring.
Yeah, I think that when you look at that particular market, traditionally it's been a kind of 15,000 square foot would be the average deal size for that particular submarket. So it's going to take some of these projects that are under construction right now and that have been built. It's going to take some of those buildings time to lease up. You have you mentioned Prologis, Emerald. They've done a pretty good job there.
Really good job.
Really good job. But you have 700,000 square feet scheduled to come online with Trammell at Port 106. They're going to build a 2-story warehouse, which is going to be a great development. It'll be a really interesting one to keep our eye on because that's a lot of product to be dumped down into this market, in a market that just traditionally does not see a lot of big tenants.
That's right. And the question is going to be, obviously, Prologis proved the concept with the triple decker with the ability to put trucks on multiple levels, but with these freight elevator type assets, are those going to prove out? Are the tenants going to move out of the smaller stuff, or, want to be close in and pay up and use the freight elevators? So I'm optimistic. The answer is yes. It's just been a combination of things that I think have hit South Seattle hard. I think eventually this stuff is going to lease up, but no question that it's hard leasing up there right now.
Yeah, and you have the other projects that are still looking for tenants. Horton is under construction.
That's a triple decker, 3-story kind of flex type industrial product.
Yeah, and I think really in track 6, same deal. But I think the big thing for those landlords is to be flexible and be willing to demise those buildings rather than just waiting for the larger tenants to come, because those larger tenants tend to be fewer and farther in between. Whereas if you have flexibility to demise those buildings closer to meet the demand of tenants in that market, those are going to lease up.
That's right. Yeah. So, and I do think, unfortunately, some of those landlords are going to have to, attend some of the city council meetings and complain and try to help us all clean up the city a little bit, because I think that's a huge challenge to leasing in that submarket.
Yeah. So that's the current state of the South Seattle market. We do think it's going to come back but be flexible and be willing to lease some of those buildings to smaller tenants.
That's right. Happy Friday. Have a wonderful weekend.
Thank you.